Hey guys, what's up? Welcome to another episode with me, Shashank Udupa, and this is Frank with Shank, episode 4. And today is actually a crowd favorite that I took from one of your comments, and the episode's name is How Do I Avoid FOMO? Right? FOMO is basically fear of missing out. So, how do I avoid FOMO? And I'm sure all of you guys have gone through this stage where you get FOMO about a particular topic and you're like, oh shit, that's so exciting. Oh shit, this is so exciting. GameStop, Shiba Inu, Dogecoin. What else? There's upper circuit stocks, lower circuit stocks, and then you'll suddenly see Ruchi Soya coming out with an FPO, and then you'll see some new IPO that's coming out, and you're like, boss, this is just so much distraction happening all around. But how do you avoid this? Because more often than not, I'll tell you what, right? When you invest in FOMO driven investing, you might get lucky maybe once, maybe twice, but overall, on a long period of time, you will definitely lose money, right? So today's episode is about how you can avoid FOMO and how I avoid FOMO. I stopped investing in IPOs a long time ago, right? I invest after IPOs because if I did get into the FOMO and if I did invest in Paytm, 1 minute silence for all those guys who invested in Paytm in the IPO. But if I did do that, the share price went from 2000 to almost 550. Now, for them to make up this money, it has to go up almost 2, 3, 4x, right? So it's going to be too difficult. So I usually stay away from this FOMO, and I'll tell you some tips and tricks on how you can stay away from this FOMO as well. Now, first thing when you're investing in the stock market, have a strategy, right? Have a clear cut strategy on what you need to invest with rules. And I keep talking about this. I have a strategy. I have made my Super 25 portfolio, which is my 25 stocks that I'm going to invest in. And I know I'm going to invest in this for a very long period of time. I know what my stop losses are for this strategy as well. If it goes below 30% or 25%, I am done. Unemotional, get out of this. Because if it goes down by 25%, then for it to go back to its original value, it needs to go up by 33%. So maybe I'm not ready for that game. Maybe I'll go invest in something else that can actually go up. So I am saying, when you're investing in the stock market or investing in the crypto market, anywhere, right, have a clear cut fundamental set of rules. Because if you don't have that, then you are more likely or not going to go into this FOMO investing, and then you will burn your hands, and then you will lose money, and then you will feel bad about it. Okay, so that's one. Now, number two is pick the people who are around you, the stock talking people, right? Pick them very carefully, because if you are surrounded by people who are investing because of momentum, who are investing because of FOMO, who are investing because some random Twitter account said ki ye upar jayega and this is the next Tata Elxsi, then boss, you are in for a very big problem, because then that might not be the case. They have done their research, you will just blindly invest and you will lose all your money, right? Very simple fact. And if the whole world is talking about something, everyone's talking about, oh my god, this is going to go up, this is going to go up, this is going to go up, and then you will be like, आज पूरा दुनिया बोल रहा है it'll go up, मतलब जाना ही चाहिए, right? No, that is not how it works. Look at people who are focusing on long-term wealth creation. Look at people who are doing fundamental investing, and look at people who are rational. They're talking about the profits, but they're also talking about their losses. Very few people in the stock market today even disclose that they're going into loss, right? ऐसा तो हो ही नहीं सकता कि एक आदमी स्टॉक मार्केट में है एंड इज मेकिंग प्रॉफिट एवरी सिंगल डे, बिकॉज इफ ही इज देन इज नॉट गोना कम एंड टीच यू a lot, right? Because he's going to make a lot of money. So he is making losses, and if he's not disclosing these losses, then you should not be following such a person, right? Because sometimes when you look at Twitter or Telegram, everything looks so perfect that he's only making money. How is that even possible? Please understand that they have premium services where you become the product for them. They don't make money from the stock market, they'll make more money from you. So choose the people you talk to about the stock market very clearly, and choose the people you need to follow on YouTube also very clearly, right? There are people on YouTube who do proper fundamental analysis and then will tell you to do the research, and then you take a judgment on the call whether it's a good company or bad company. One of them includes me, okay? Now, number 3, very important rule: stop keeping track of your exes. Okay, I'll tell you why you should stop keeping track of your exes. Is because what happens is, sometimes you made good profit in a particular stock, 10%, 20%, 30% profit, and you exit it. But you know that horrible feeling of ek nazar to rehta hi hai wo stock pe, and it is still in your watch list. So what will happen is, suddenly you will keep looking at that stock, right? मैंने तो 30% में exit कर दिया, but you know that is my ex stock, right? But you'll keep seeing it. Suddenly the stock went up by 15% or 10%. You'll be like, boss, I think I got out of this relationship too early. Maybe I should get back into this relationship and see if this is a long-term relationship. And you will again retake the investment back into that stock. You will take all that profits that you made and reinvest in that particular stock, which is your ex. And then what happens? Dhoka de diya, and it starts going down, right? And then if it starts going down and you're crying and you're like, जो बनाया था वो भी चला गया. Because when you understand this, it falls faster, it goes up slower, right? That's how the percentages work. So a 10%, 20% fall means it should come back by 30, 35%. So you lose more money. So stop keeping track of your exes. Just understand that there is a point where a stock price goes up, and then there is a point when it has to correct and come down, and then it consolidates. When it consolidates, that's the best time for you to go invest and start buying, right? So don't buy it when it's only going up, don't buy it when it's falling down. Wait for it to become a boring person, and when it becomes a boring stock, that's when you invest in it because it's fundamentally strong, and then enjoy the rally that happens in the next jump, right? So that is something that is very important. Stop keeping track of your exes, right? Leave it. We can come back later. वापस करना है तो कर लेंगे, ठीक है? Now, point number 4, do not be biased. And what do I mean by do not be biased is because sometimes we all have emotional attachment to stocks, right? In the stock market, you cannot be biased and you cannot have any emotional attachment to any stock out there in the market, right? So you might think that ये मेरा favorite है, right? ये ऊपर जाएगा. I have this gut feeling that is there inside my gut, that inside my body, that पूरा मेरे को, अनोखा destiny is telling me that this stock is going to go rally. Boss, please understand it does not work that way, right? It all works on demand supply gap. It all works on fundamental analysis of a stock. It may be working on technical analysis as well. And it also works on the market sentiment. So if your gut feeling is the same gut feeling that 1,000 people in the stock market have, then the gut feeling might be right and the stock might go up. But if your gut feeling is you're only person in this world who has that gut feeling, then there is something wrong, right? So see how momentum is playing, see how the world markets are evolving. Suddenly there was ethanol blending program that came which said that sugar stocks will do well, so all of them started running towards sugar stocks. Then there was a massive shortage that happened with wheat. Then you saw ITC going up as well. So it all depends on the momentum play. It is not in your control. It is in the world's market control. It is not in your control at all. So stop thinking that you have this divine intervention that you will feel ye upar jayega or jayega. So don't be biased. Look at data, look at fundamentals, look at technicals if you can, and then make an informed decision ki हाँ भाई ये ऊपर जा सकते हैं. And even if it can go up, how much can it go up? Maybe 10%, 20%, 30%, or maybe you're like, this is a very good stock. It is a game changer. I'm going to stay for 5 years. Loss ऊपर नीचे आगे पीछे चलेगा. I'm going to stay invested for 5 years. So that is very important. And this is very important to also stay away from FOMO, because if you're biased and you're already biased and suddenly there's a news article that talks about your favorite stock, you'll be like, boss, all in में जाने वाला हूँ, मैं पूरा लोन लेके डाल दूंगा because ये ऊपर जाने वाले, right? So don't do that. Don't be biased. Just have a strategy. Just have a plan. Rule number 1, invest with the plan, right? Now, the last thing that you can do, the fifth thing that I talk about, which is very interesting if you're looking at from not investing in FOMO, is to do your own research, right? When there was FOMO with Shiba Inu, right? When there was FOMO with Dogecoin, you do your research, you'll realize there's nothing there on it, right? Because there's no fundamental backing, there's no fundamental value about anything. So why would I invest, right? Even if you look at other stocks that are just rallying for no reason, do some fundamental analysis, do some research, because you will understand eventually that once you do your research, you know that this is just a FOMO game and it is not a fundamental play. So yes, the whole world might be investing in that, the whole world might be making money in that. You, I would say, slightly try to stay away, right? If you stay away, it'll be easier for you, or else you will invest in the FOMO market and you will definitely 100% get caught in this FOMO game and you will start losing all of your money, right? So just summing all the 5 points again, point number 1 is have a clear strategy with clear rules, number 1. Second, keep your people who you talk to about the stock market very smart people around you who are focused on fundamentals and technicals and not focused on FOMO and boss making go market when no. Third thing is stop keeping track of your exes. If you exit a stock, leave it. Don't think too much about it. Fourth thing I would say is don't be biased. Please do not be biased at all. And fifth thing, do your own research, or else this is going to be a big fail for you and you will have massive problems over here. Right? So these are my 5 tricks to actually stop investing in FOMO. I hope this helped you guys. And if you did fall into FOMO, I understand it. समझता हूँ. So if you did fall into FOMO, I want to know which stock or which crypto coin that you invested in FOMO in the comments below, so everyone else can also understand कि हाँ ये भी हुआ था, right? So stop investing in FOMO, and I'm here obviously coming every week to come and give you some interesting advice on how you can stay away from all these bad problems so that you don't lose money. We're in the game of making money, so let's make money together, not just single-handed, right? Again, this is me, Shashank Udupa, signing off. But if you like this video, right, and if you think there was something that you learned from this, click on the subscribe button, click on the like button, and I'm going to see you guys soon. This is me, Shashank Udupa, signing off.